Hello guys, Robbie here again, bringing you another video taking a look at what's been going on with Bitcoin over the last week or so. Bitcoin has been struggling to break the 70k resistance zone, been bouncing between $60,000 to $70,000. Why we are still trading in these zones? Despite volatility, Bitcoin is still holding well above previous highs of like 69, 68k from the previous cycles. But we are very much at this resistance level where we're bouncing between 60 and 70k. Any macro and micro factors that we can actually explore and take a look at a couple of different sources around the web which might be highlighting what is causing this bounce, who might be profiting from these bounces, and as a retail investor into Bitcoin, different things that we should probably have an awareness of. So really pleased to be doing another video on this for you all. As always, like, subscribe, let me know if you've got any questions or comments, please leave them down below. So without further ado, going to start with CoinMarketCap, as I often do. Always like to check in there, talk about it in my previous videos. CoinGecko, also an equally good tool, just for taking a look at what's been going on over the last 24, 48 hours to a week and beyond really. But we're interested in the short term, last 24 hours to a week really. That's what this video is focusing on. There's obviously an entire history of Bitcoin we can look into if we want to. As we can see here, in the last 24 hours, Bitcoin has kind of bounced between 69 to 71-ish K, just topping off at about 71.2K yesterday evening in the UK time, 6 p.m. And then if we look at around, we're just before 6 p.m., we're actually essentially $1,000 or about $1,000 below the pricing from yesterday around this time. So again, we're just going sideways. This is exactly what this video is about. Why are we going sideways? Why can't we go higher? If we look over the last week, we can see that again we maxed out at about 71k, which we kind of briefly touched yesterday, but also in and around the 9th of March, which is 3-4 days ago, we hit 65k-ish. If we zoom out slightly further on CoinMarketCap, it actually allows us to then go to a month. You can see that we've been slightly lower, just above the 60k mark, and again topping out here on 4th of March at about 73k. So we're very much in between two different levels. Why can't we break out of that? Who may be profiting from this? Well, if we look at the macro level, we can see here that CoinDesk are reporting on Bitcoin being stuck under $70,000 and investors are playing it safe before the US inflation report. They also, further down here, reference the war in the Middle East. They point towards the fact that bullish momentum's weakened after the energy secretary described in a now deleted social media post that the US escorted an oil tanker through the strait, where currently there is obviously ongoing conflict between Iran and some other Middle East countries, the US and so on. So CoinDesk are very much pointing towards the fact that this volatility in oil pricing, energy pricing, is on the macro level causing a wider uncomfort in money markets, okay? So generally speaking, we have a sentiment which is suggesting caution right now as a result of perhaps the macro around the war which is occurring or the conflict that is occurring in the Middle East, but also as a result of waiting for the inflation report. So those are two macro factors that we can consider around why Bitcoin seems to be stuck in and around this 70k top mark for the moment in time. Other than that, we have to continue to consider this institutional exposure and how that is affecting the Bitcoin price. So if we take a look at one of the biggest institutional ETFs, BlackRock's IBIT here, we can see that largely, again, the price seems to be remaining steady, albeit over 6 months we can see it is down 40%. If we look at the 1 day and the last of the 1 month, it just seems to be trading sideways in this pricing structure. All time though, obviously we can still see that it is up 42%, which points towards, when we zoom out, still a continued upwards trend in these ETF pricings that are tracking Bitcoin. The automatic thesis may be that because IBIT is trading sideways, that Bitcoin is also trading sideways as a result. Not entirely the full picture, because as we know, the ETFs such as IBIT and a number of other funds across the globe are only constitute a proportion of the overall holdings of Bitcoin, but it is definitely now starting to have an impact on how Bitcoin pricing is moving, and also why it may be moving between 2 points. It may be struggling to break resistance and indeed even below certain support levels. If we're looking at some of the data which allows us to observe the institutional inflows, for example, Farside here, it tells us a story that there is actually continued strong institutional demand. For example, where there is a red marking here, it demonstrates a sell, but where there is a black marking here, you can see that there has been a net purchase of Bitcoin. So red is a sell of a Bitcoin, and it shows us the ETF flow in US millions. So for example, if I just highlight here, 78.9 million inflow into the IBIT ETF occurred on the 24th of February 2026. So overall, these values show us that there has been net acquisitions of Bitcoin made as a result of the purchases of these ETFs. So it's a little bit difficult to see here, but BlackRock's is IBIT, Fidelity's is FBTC, and so on. So we can see that obviously there is a strong institutional demand here for Bitcoin. If we scroll down as well, this is much easier to see, better demonstrated within the graph here. Bitcoin spot ETF cumulative flow in millions. So obviously, typically speaking, graph goes up means that there is more, right? So here there is more institutional demand over time for the spot ETFs of Bitcoin in millions. So 60,000 million, right? Since January of 2024, last couple of years. And we can see since for October 2025, when we had some of our tops for Bitcoin, that the net position of millions held in the ETF has decreased slightly. We can just see this here to here, from around 62,000 to around 56,000. But despite that cool off, the institutional demand remains strong. We can see this here as well visually in a more thorough breakdown of the different funds which are holding or value within their ETF equivalent, which is exposed to Bitcoin. So we can see that despite the Bitcoin moving sideways, there is a strong institutional demand for Bitcoin. We can also use CoinGlass. CoinGlass is a really useful tool to show us short-term price movement across derivative markets. That's a really complicated way of saying betting on whether or not Bitcoin goes up and down, right? Quite often, traders are using leverage to do so. So they're borrowing money, for example, against a holding that they have. It sounds really complicated, but it's actually not too complicated. The terminology is, of course, but essentially all is that happening here is that traders and other entities are betting on prices going up and down. And when traders lose their margins, they get liquidated. So here, this tool called CoinGlass allows us to literally see in real time that in the last hour, 1.2 million in short positions has been liquidated. That means that $1.2 million has been automatically taken from a trader who was betting against Bitcoin moving up. Again, we can see in the last 24 hours that $83 million has been liquidated in people betting in price going up, and $72 million has been lost by traders, essentially, or liquidated from traders who have been betting on Bitcoin going down. So that's essentially what we can see here through this tool, and we can literally see it in real time, such is the beauty of the blockchain. You could not see this in real time if it was not as part of a decentralized open market. So for example, we cannot see these things happening in real time with respect to the ETF because that is not on chain, it is not open. But what we do know with respect to ETFs is that if there is a purchase of an ETF, i.e. IBIT of BlackRock, they then need to acquire that Bitcoin at some point on chain to back the position of the person who has bought that ETF share. So we still know that strong institutional demand for ETF equals a strong position requirement of Bitcoin for that fund. And this tool here is also part of the CoinGlass website. Shows us visually, for example, where all of the liquidation hotspots are. So, for example, along the right hand side, you should be able to see the green moving up here, and we can see, for example, that this is a cumulative short liquidation, meaning that, for example, if the Bitcoin price hits $72,000, $463 million in shorts will be liquidated. So people betting Bitcoin goes down. There is $476 million worth of people betting that Bitcoin does not reach a level of $72,000 over a period of time. And these lines show us some hotspots for where there's some key indicators around where people will be leveraged. The interesting thing about this tool is that it shows us essentially the positions of traders in terms of their shorting and longing, betting up and down on Bitcoin over a period of time, and where they will get liquidated at certain levels. It's super interesting. It's crazy that you can almost see that very openly, but what does that do? Well, there's an argument that suggests that essentially leaves it up to manipulation, because seeing this data on chain openly like this, it begs the question, who benefits from moving the markets sideways? Well, one thing that is evident through analysing data is that more often than not, markets move towards liquidity clusters. What I mean when I say liquidity clusters is where there is a bunch of money that is being either bet that Bitcoin will go up or Bitcoin will go down. And not just Bitcoin, this is true of many assets. Why? Because if the price touches a certain point and lots of longs get liquidated, where is that money going? Who benefits from that? Well, naturally you'd say, well, the people that are shorting it, of course. But then if it then goes the other way in shorts, who's benefiting from it going down, right? Or up. So typically speaking, people look towards market makers and large trading firms as the ones that profit from volatility and liquidity rather than the price going up and down. Sideways markets allow trading firms and market makers and quant traders, etc., to profit from both longs and shorts. They can look at where a liquidity cluster, where a lot of money is sat for a long and a short, and bounce the price between these two levels, causing automatic liquidation of events for these traders that have been betting or shorting or longing, betting for or against the price moving up, and just hitting these different triggers and essentially pushing prices up and down. Now, the issue with that, I guess, is that you could say that this is price manipulation, and surely there are regulations around this. But the interesting thing with the blockchain and Bitcoin is that a lot of it is on chain and viewable by anyone. So how is that insider trading knowledge? Is public knowledge. So there lies a difficulty with this, and this is where total openness and decentralization could become a target. However, I think it's also key to say as well that many retail users use centralized exchanges for placing long and short positions, and in theory this data shouldn't be visible. However, what is to say that this data is not being shared to groups which could benefit from it? And this has been leveled. This has been leveled at many exchanges over the years. Oftentimes there is no proof, it is just theory, but one could speculate how this could heavily impact retail traders and benefit large trading firms or market makers to have this knowledge. Multiple people can profit. So in summary, when markets move sideways, it's ideal conditions for market makers because they can trigger liquidations on both sides of the market. A key thing to remember, guys, in all this is that markets don't move randomly. They tend to move towards the liquidity. So using the data that we can see on screen here is a really good way to highlight to us whether we can expect Bitcoin to go up or down. Whether or not it can be used as a perfect indicator, that's a different question. But I think it's fair to say that there are key indicators that we can look to predict where Bitcoin may be moving. Despite the fact that we can see some short swings, which we are seeing between the 72 and say 63k range over the last month or so, or even longer, maybe the last 3 months, that's not really what most retail investors are interested in. Of course, they are looking for the aggressive price movements of Bitcoin, either upwards or down, to decrease their exposure or increase exposure, or whether or not you just want to hodl. So what is going to break this bouncing range where there is obviously some greater powers benefiting from bouncing between these two indicators? Well, it is, to be fair, impossible to say. However, we can look towards the fact that history may not repeat, but it rhymes. Macro catalysts are often key indicators for Bitcoin moving aggressively up or down, or can be at very least. For example, inflation. When inflation is going really high, oftentimes institutes and individuals all look to Bitcoin as a hedge against that inflation. Interest rates and Fed policy are often indicators of price movement again. If the interest rate is high, for example, then again, people look towards Bitcoin and other asset classes as a hedge. It's why over time, Bitcoin and other asset classes like gold have always moved essentially aggressively higher in value against traditional fiat currencies. So macro catalysts such as those can affect Bitcoin and shift sentiment across these markets. Large capital inflows now are without a doubt a factor in Bitcoin these days, whereas historically they were not. ETFs and the inflows there impact the price movement indirectly, although it's more difficult to see. If a really strong institutional demand pours through these ETFs, that could, in theory, break these resistance levels. And there is every indication that this demand is going to continue. We only need to take a look at quotes from some of the fund managers that highlight just how aggressively bullish they are on cryptocurrency-backed ETFs, in particular the likes of Bitcoin. Just have a quick Google, you'll see BlackRock executives talking about Bitcoin and IBIT in particular, for example, and how they feel that this will only grow over time. So that is another factor, for example, that could affect a more long-term, a positive price movement for Bitcoin. Another consideration is liquidity cascades. If there is a major collection or cluster of funds that are either short in or long in the market, it hits a key level and that forces a lot of sell-offs of Bitcoin because traders have been automatically liquidated at those levels. Sometimes that can impact those psychological triggers at a retail and an institutional level for that matter. People notice a cascade of sell-offs and the price is dropping lower and lower. That can force other people to sell. We are essentially humans by nature and we have psychology at play. So that can also impact aggressive price moves up and down, causing panic, or on the other side, causing FOMO, people wanting to get in. So these three things that can break the range, sometimes there doesn't seem to be a rhyme or reason, but underneath the hood, all of these things could be happening at once. More often than not, there is a perfect storm of these things that cause price movements aggressively higher or lower. So always worth keeping an eye on what's going on. One thing that is for sure is that over time, Bitcoin has typically obviously only gone one way, and oftentimes it's just worth zooming out a little bit more to get that affirmation required with respect to Bitcoin. As always, guys, this is not financial advice. Do your own research. This is me providing my own insights, my own readings, and hopefully providing some education, taking a look at Bitcoin over the short term. If you are enjoying this content, please do like and subscribe. I'll be doing a Bitcoin analysis video every week going forwards, hopefully alongside other content looking at smaller projects within the cryptocurrency market. If you've anything you'd like to see in particular, please do drop it in the comments below and I will try my best to accommodate. Thank you for your support, guys. Take it easy.